Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to talk about a proposal for a piece of legislation in the US. I saw a tweet by some guy who's promoting it called Rohan Grey, the moron. And so obviously I'm not a fan. We will jump out. I'm going to explain a little bit to you about what this legislation is about. It's related to some crypto stuff. It's called the Stable Act. And I'm going to go through why that's relevant and how it might drive the types of things that we're going to see in the rest of the world over the next little while, what that means for you, because it definitely would affect how you would do your placements of funds. And so yeah, stick around to the end. We will kind of be covering it all. So before we jump into that, if you have not already, please obliterate the subscribe button, click the notification bell. If you like the video, please give it a thumbs up, share it with your friends. We really appreciate that. If you're interested in learning about international tax planning, asset protection, how to pay the lowest legal amount of tax possible, opening offshore companies, opening offshore bank accounts, getting second citizenships, residencies, passports, investing, let me know, reach out to me, clarity.fm/Michael Rosmer, there's a link below in the description, and check out our websites, offshorecitizen.net, offshorecapitalist.com. Okay, diving into it. So I didn't know about this guy, this Rohan Grey, until a group that I was in posted this today, and he said, "I'm thrilled to share the announcement of Rashid Tlaib's new Stablecoin Tethering and Bank Licensing Enforcement Act, Stable Act, sponsored by somebody or other for Congress, chair of the House Financial Services Committee, FinTech Task Force, Republican Lynch." Okay, so first of all, if you're an American, write to your Congress people and tell them this is a bunch of bullshit. Okay, it's terrible, terrible stuff. Let's talk about what this says. This Stable Act, which they're proposing, and which I think there's a reasonable chance could go through actually, is terrible. And what it basically says is that if you are storing, if you're providing stable coins, then you should be regulated like a bank. And probably the primary main driver that we've seen behind this is Facebook doing their Project Libra. I think they changed the name of it now to something else. But anyway, they had this Project Libra that they are proposing, which is kind of like their version of a stable coin. And it's going to be backed by a basket of currencies. And hey, they're going to facilitate micropayments in the third world and help with the unbanked poor and all this stuff. Things that are actually really good and you should probably do. And Facebook actually has the market power and the penetration to probably be able to make that quite effective. However, from the perspective of the world, in particular the US government, they didn't like that at all because they figured it threatened their currency sovereignty, which by the way is a reason why all this stuff about central bank digital currencies and them issuing in some new one to replace the US dollar is probably bullshit because of the fact that they really like having their power of their own currency, and why would they give that up? So anyway, it's led to all kinds of things, and stable coins are caught in the crosshairs. Now, legitimately, there is some questions around whether or not Tether in particular, the largest of the stable coins, is actually properly backed, right? Whether it's a Ponzi scheme, et cetera. And so in theory, there could be billions of dollars of losses that could occur in Tether, okay? That would be, a bad thing. And, so they're presenting this as, oh my goodness, these poor people are at risk and we're gonna protect them by requiring, and if you go through the act, let me see if I can just pull it up here for you really quickly. It states that require any prospective issuer of a stablecoin to obtain a banking charter. This, as we know, is difficult in a lot of places. Require that any company offering stablecoin services must follow the appropriate banking regulations under the existing regulatory jurisdictions. Terrible. Require that any company or bank issuing a stablecoin to notify and obtain approval from the Fed, the FDIC, and the appropriate banking agency 6 months prior to its issuance, and maintain an ongoing analysis of potential systemic impacts and risks. Terrible. And require that any stablecoin issuer obtain FDIC insurance or otherwise maintain reserves at the Federal Reserve to ensure that all stablecoins can be readily converted into United States dollars on demand. Maybe you could argue that that last one is not so bad, right? What's the problem here? First of all, the banking system is anything but safe because of all this regulation. Or maybe, I might be exaggerating that, okay? It is possible that certain parts of the regulation help. I would say that some of the capital adequacy requirements under the Basel III regulations, et cetera, do help. And, so I'm exaggerating when I say that they make it anything but stable. But for instance, I was meeting with a banker friend recently, very recently, and he was telling me he knows personally of multiple banks in the country that he operates in that are in trouble, and they're doing financial accounting tricks to try and prevent that from being visible, and the government is encouraging them to do that because it doesn't look good to other governments, right? Terrible, terrible situation. And the problem is you have no clue what's going on as a common person, right? It's completely opaque. I have a friend who assists billionaires, like very, very wealthy people, with kind of wealth preservation and investing and things like this. And I remember one of the things I was talking to him one day about, hey, listen, why is it that somebody would accept negative interest rate bonds? This seems insane to me. And he was like, look, like you can't trust the banks. You can't keep $1 billion in a bank. This is a terrible idea. So having a bond that has a slight negative interest rate is probably better than the safety loss of going and putting the money into a bank, because you just don't know if the money is safe in the bank. So anyway, what you're talking about when you're talking about banks is this very complex, very opaque environment. Okay, sure, there's regulatory agencies that are looking at it, and so to them it's maybe a little bit less opaque. But 2008 showed us just how fragile this system is, okay? It's not good. It's not good. And so introducing this into crypto right off the bat, into stablecoins, etc., I do not buy that that is going to create somehow things are going to magically be better, okay? Don't buy it at all. Second of all, what are you going to do? You're going to raise the costs dramatically, right? You're going to increase the friction of doing business. So the whole point is that the banking system today is making it very, very difficult for people, in particular people internationally, to do normal, proper business. Okay, there's a culture of safetyism. It's terrible. I hope that you're very anti the culture of safetyism, which basically says, hey, listen, if there's any risk, we don't want to touch it. As opposed to the opposite, right? The opposite is, hey, listen, we're going to allow it to go through unless there's some really big reason to be concerned. The opposite is the case. It's like, hey, prove to us that it's good, and then we'll let it through, right? It's the terrible attitude. It's going to undermine productivity. It's going to cause all kinds of issues. I think it's a terrible thing, and I've done some videos on this in the past. Culture of safetyism, very bad, very, very bad. The reality is that there is risk in the world. People have to be willing to take on some degree of risk, but they need to have skin in the game so there's not a risk transference that's screwing somebody else, right? I'm totally fine with the idea that, hey, listen, if you screw somebody, you get screwed and taken down for it. But if you're in a situation where you're not allowed to just do normal business, or there's, like what's happened is they've just made these banks liable for this, and therefore they're not wanting to have their clients do it. It's a terrible thing. So imagine now how that affects stablecoins, right? Stablecoins are hopefully a really effective tool, and that's the case. Now, this guy here, I read over this Twitter thread, people's comments, etc. People didn't give him good response, which is positive. We don't want him to have good response. It's a bunch of nonsense. And he kind of goes through and explains blah, blah, blah about his perspective on it. And there's an interesting book that he mentions called The Money Problem, Rethinking Financial Regulations, or something like that, which is an interesting thing, talking about the shadow banking system and the Eurodollar and kind of that sort of thing. And you can go into the whole conversation with that. Maybe I'll do something about it in the future. But he just doesn't seem to get it. Like, some people would ask questions. They're like, hang on, like, would this apply to algorithmic stablecoins? He's like, yeah, potentially. I mean, if you're holding something that's supposed to be redeemable for dollars, and they're like, well, hang on a minute, who's holding it? It's a smart contract holding these. Well, there's somebody, I could go through and read you his comments. They're very ignorant about how crypto works. And he's like, oh, it's simple. You just don't process the blocks that contain that information. It's like, nobody's actually looking at these blocks. That's not the way that it works. It would not be feasible to run nodes if you had to sit there and go through the information on all these blocks and be like, oh, I like that, I don't. The whole idea is that you're not supposed to do that. The whole point is that people are supposed to have a degree of financial transactional freedom, right? If you want to say that somebody is doing a crime, great, prove it and go after them there. Don't stop their transactions, okay? So anyway, bottom line is they're working on bringing this in the US. I think very highly, what I would suspect is that this is driven by the banking lobby. The bankers are very powerful. They have very powerful lobbying groups in the US. And I think that they're saying, whoa, we don't want competition. This is terrible. They're basically acting like banks. So they're saying, we want you to be regulated by banks, like banks. And what that's effectively doing is it's putting the little guy out, right? So a lot of these regulations, they don't hurt the big guys. The big guys can afford it. They hurt the little guys. And that's bullshit. It's terrible. So yeah, Not a good situation. Next, I think that because of the fact that they're doing these, they're empowered by these lobbies, et cetera, and they're basically trying to protect the self-interest of those people, I think there's a decent chance that they will go through. And I think that it's not just going to be the US that's going to feel this way. I think that countries in general don't like competition. They don't want you to have control of your money like that. They don't like the idea that there's something out there that they can't control. So this is one of many assaults that they're going to make on it. And we'll see where it goes. The problem with this is that if you do this, you're likely going to drive the innovation out of the US. The innovation will happen somewhere else, right? And when it's happening somewhere else, they're going to be left behind. It's a very short-sighted, it's kind of this thing that I talk to people about where when you try to clamp down too hard, it causes people to go elsewhere. It's this thing that, hey, listen, when the taxes are at a reasonable level, okay, people pay them, but when you raise them too high, they develop a black market, right? That's kind of what happens. Same idea here. I don't think it's good. So anyway, how is this relevant to you? In my opinion, they have a strong ability to do this to any of the stable coins that are backed by US dollars, okay? USDC, it's like Paxos, Tether, of course, et cetera, et cetera, et cetera, okay? I think that it's virtually impossible for them to enforce this on DAI or the algorithmic stablecoins. So this reinforces my statement, I've been kind of telling people this, that if you're holding stablecoins, I think the safest one to hold is DAI. There is a risk that the basket of assets, if they were to take a massive plunge, what that could do to the value of DAI. There is that risk, okay? So it's nothing is risk-free. But when you're in that situation, it's like, do I want to risk a government being able to come in and control these things on me? I don't. I think that's terrible. I think that they're playing with something that they've overreached. That's my opinion. And so what I would recommend to people is if they are holding some sort of stable coins, if they're saying, okay, listen, I'm going to be holding some cryptocurrency and I don't want to hold in, Bitcoin, Ethereum, or, any million, whatever it is, few thousand different altcoins. I don't want that volatility. I want something stable, etc. I would say my recommendation would be have that in DAI. Technically speaking, USDC is backed one-to-one, it's audited, all that kind of stuff, so you could argue that it's safer. But from my standpoint, their ability to control that, the willingness to have that controlled, etc., is a risky thing. And I think it's going to be next to impossible for them to do that to the algorithmic ones, in particular DAI. So that's my advice. Anyway, I hope that helps. Certainly, if you have some sort of influence, please, push up against it. I think it's a really bad thing for the world. And yeah, if you're interested in these subjects, like I said, tax planning, asset protection, how to pay the lowest amount of tax, offshore banking, offshore company formation or international company formation, residencies, citizenships, passports, investing, etc., reach out to me, clarity.fm/Michael Rosmer. I will look forward to seeing you guys on the next video.